All right, while we're changing mics to get ready for our first session, I have the wonderful pleasure of introducing Tiffani Dorsa. So Tiffani Dorsa is a director with Postal Wait in Netterville. Their accounting and assurances services group. She joined the team in 2004 and she has been a director since 2013. And we are co-presenting this session. So like full disclosure, she used to be my auditor. And I don't even know now if I'm allowed to call her my friend, but I have a lot of affection for Tiffani, but we keep our independence, which she'll talk about later. Before that, she worked at a New Orleans CPA firm for 9 years, so she has over 23 years of experience in all aspects of auditing from, you will see, it's going to shine through in this presentation, from planning, evaluating internal controls, testing compliance, to preparation of the financial statements and the note disclosures. And her practice areas are with governments and nonprofits, especially foundations, cities, retirement systems, and school boards, and of course our friend the single audit. So please join me in welcoming Tiffani.
Thank you, Diane. Good morning, everybody. What do you think about having an auditor as your first session of this morning? Most of you don't like us very much. Have several names. I've been called a bug, the bean counter. Most of you look at me as the enemy, but we're here to debunk some of those myths about what an auditor is, what we do, and how we can make, and we're here to assist you all in making the process better for your government. So we are not the enemy, I promise. And actually one of my favorite nicknames I get called from all of my friends is T-Money. Kind of crazy, right? But Tiffani and money, you know, that's what the auditors kind of go hand in hand, right? Financial statements. So we're here to talk about what an audit is. We're going to try to get this to work. Sorry about that, y'all. It's a little bit of a delay, I think. Can we go back a slide? Oh, too many slides. We'll just try it like this. Okay. Having a little trouble. Technical difficulties. So an auditor is not responsible for IT. I will just tell y'all that right off the bat. So we're going to talk about what an audit is, what an auditor does, what an auditor doesn't do. We'll talk about the types of reports an auditor provides, and then we'll kind of go through a blank screen. So what an audit is. So a systematic examination or review of the financial statements for the accuracy of the entity's financial statements. How many are familiar with that's what an auditor does? Raise your hand. Okay, for those in the audience out there in the virtual world, I'm sure you've all agreed with everybody here. Independent CPA. Diane and I have been friends for a long time. She was an auditee of mine. However, an auditor has to be independent in mind and appearance. So we use professional skepticism, and we go through an independence checklist before we start and engage with our client. I'm sorry, I just yelled at everybody. There are a set of standards that we have to follow to remain independent. We do that audit in accordance with a set of standards. There's two sets of standards. Generally accepted accounting principles. That's the accounting standards that you have to follow when you're performing your financial statements. So we have to understand those, and we have to understand what goes into preparing those financial statements. The standards that we follow are the generally accepted auditing standards put out by the AICPA, as well as the government auditing standards that have been issued. So we actually have two sets of standards that we have to follow. When we go into an audit engagement, you probably think, what are they doing? Why are they here? How long are they going to stay? Why do they need all this information? So we have standards that we have to follow. That dictates what we have to do, what we have to document, what we have to look at to give you an opinion on the financial statements to ensure they are materially correct in accordance with generally accepted accounting principles. So, unmodified opinions is what everybody's after, right? So that's what we try to achieve. Can we get to an unmodified opinion in the financial reporting. So the whole purpose of what we do is for one-page report in your financial statement, unless we're doing a single audit, and we're going to talk about that. There's several reports that we have to issue. So our whole purpose is to obtain the information that we need, gather all the information, documents, et cetera, that we need in order to express an opinion that your financial statements are materially correct in accordance with generally accepted accounting principles. So what is materiality? Materiality is quantitative and qualitative. It's in the auditor's judgment of what that number represents or what that may represent to the users of the financial statement. So it could be a number, and it could be a bunch of different qualitative factors. And it provides reasonable assurance. Why reasonable assurance? We can't audit every number in a financial statement. We would never leave 24/7. Can you imagine having us in your office 24/7? You're ready to get rid of us after like the first 2 days, right? We ask too many questions. So to provide reasonable assurance that the financial statements are really transparent. So that's an audit. Pretty simple, right? So 5 misconceptions about an audit. We're here to find errors of fraud. I will tell you as an auditor, I have never found fraud. I've been doing this for actually 28 years now. The resume was a little outdated. Been doing this for 28 years, have never found fraud. Why? Because we don't look at every transaction. We do samples. We test different items. And fraud is actually very difficult to find, especially if there's collusion, right? Because we're looking at internal controls, and we're trying to understand the segregation of duties, and if they exist, and if 2 people are in the same goal of committing fraud, it's very difficult for us to find that. Audits are unnecessary. I don't know about you. You may think they're unnecessary, but we're here to ensure that the financial statements you're presenting, that you're representing to the public, are accurate. And that's the information you want to present. We're only concerned about the past. That's true. An audit is based on prior information, the end of a fiscal year. We come in after the fact. However, the benefits of an audit are we may identify things that you as an organization can use to grow, to become better, to enhance the controls of the organization. Although an auditor doesn't test necessarily all controls, we do have to gain an understanding of those. And when we walk through that process, the whole reason we do that is to understand where the risks are within the organization and if we can rely on those controls. But there may be opportunities there that we see that may be able to provide you additional information to enhance those internal controls or opportunities to make recommendations for more efficiency within your organization.
And if I could interject,
absolutely.
One of the most important things is that the auditor and the auditee are on the same team. They're not on different teams. The opponent is misstatement, error, fraud. That's who we're fighting against together. We're on the same team.
Thank you, Diane. Absolutely. We are on the same team. We really are not out there to be a nuisance. We're not here to try to find something to write you up for. Believe me, the amount of time it takes us to actually write a finding and document all the things that are required for standards to make that finding exist takes up our time, right? And nobody has a whole lot of time these days. I don't know about you guys, but staffing has been a real issue for our firms these days. Pandemic has had a significant impact with the remote work environment on, staffing, experience. People are getting sucked up left and right. So, you're trying to be efficient. We're all on the same team. We're trying to make you better. So just remember, we're not the enemy. We're trying to make you better. Number 4, which says the auditors are responsible for the financial statement. That actually should be number 1. The auditors can assist in preparing the financial statement, but ultimately the responsibility of the financial statements lies with management, lies with the organization. We are not here to prepare the financial statements for you. We can assist you with that, but you have to have the skills, knowledge, and experience to accept the responsibility for those financial statements. Understanding what governmental standards say, what they require, sometimes is quite difficult, right? So trying to understand all of the standards, especially that keep coming out left and right. We just hit 100, or a little over 100, not that long ago. So there's 100 GASB standards, 100 plus, 101 I think, plus GASB standards out there. So how many of you can say that you know every one of those standards backwards and forwards? Probably not. But we can help you with that. We can teach you, we can train you, we can help assist, we can prepare. But again, you still have to understand what's required and be able to take responsibility for those financial statements. So there's several principles underlying the audit process. We already talked about the purpose is to express an opinion of the financial statements, but they're based on a premise, and that premise is management and, when applicable, those charged with governance will provide the information that is requested and necessary to prepare the financial statements. Management is responsible and puts in place internal controls over the preparation of those financial statements and allows us access to all of the individuals that we need to have access to in order to obtain the information to express that opinion. So the underlying premise of an audit process is that you give us everything we've asked for, access to all individuals, access to all information that we may need to support the opinion on the financial statements. Our responsibility is to perform that audit in accordance with standards. We have professional ethics that we have to deal with. We need to remain ethical, we have to remain independent, and we have to have the competence to perform these procedures. And then we go out and perform the audit, and then we have to give you a report. That's the general principles of an audit. And I'm sorry, Janet Jackson, I don't know how she does it. Okay. The audit process involves risk assessment. I said we can't go out and audit every transaction, right? Because guess what? We never leave. And I know you guys don't want us to, you know, I know we like each other, but, you know, like to have coffee, but we do want to leave too. It involves a risk assessment process. That risk assessment process is where we analyze, we gain an understanding of your organization. We identify the areas where there may be risk to your organization. And from there, we develop procedures around those risks. It may be internal controls, it may be a recent change in your environment, it may be new standards that are impacting your organization. So our role is to understand all of those things and then risk assess and where the areas of risk may be to ensure that you're complying with those standards. Right. Outside of the risk assessment, apparently I hit the button. Outside of the risk assessment, you know, as we identified the procedures that we're going to perform, there are certain assertions that underline the account balances and transactions of a financial statement. These assertions are listed here. Accuracy and valuation. Are things appropriately recorded, appropriately valued as required under the standards? Existence. Does the asset or liability exist for your organization? The rights and obligations, does it belong to your government? Does that liability, are you the obligor for that liability? Completeness. Completeness is a big key area for an auditor. Before we pull samples and before we take tests of controls and documentation or review journal entries, the first thing the auditor is going to say is, how do I know this data is complete? So there's a lot of procedures around completeness, because if the documentation is not complete, guess where the error may have occurred? In the information we didn't receive. So what's being presented, we look for completeness of the data. So let's say your whole cash disbursements journal. We will take a listing of all your cash disbursements paid out during the year, and we may tie that back to your cash account, reviewing your bank reconciliations, trying to determine completeness of that data. So for both account transaction on the balance sheet side, as well as on the income statement side. Did something occur during the right period or properly reported? Cutoff is one of those things. Is it in period A or should have been in period B? And then classification on your financial statement. Is it in the right spot? Is that a deferred inflow or outflow, or is it really an asset or a liability? So GASB likes to throw these weird terms out there, right? Where we can't, we no longer define an asset and liability. If it don't fit that criteria, we're in deferred inflows and outflows. Blew it everybody's mind. So if you're, for me, who does both FASB World and GASB World, totally new concept of ideas, right? Deferred inflows and outflows. So how do we get the information we need? We're going to ask you a bunch of questions. We're going to do inquiry. We're going to inspect the documents. So when we select a sample, we want to see the invoice that supports that transaction. We want to see a contract that provides for you to make those lease payments. And everybody's new favorite standard, the lease standard, is effective for your June 30th fiscal year ends. Happy day. Pandemic helped us a little bit. We kind of got that delayed a little bit, but happy day, leases are here. Unfortunately, they're here to stay. I'm not going to talk about leases. I don't want to blow everybody's mind. But we inquire about the policies and procedures that are in place. We confirm with external third parties to determine if the information that's presented is accurate, is in accordance with the agreement. Is the money that you say you recorded, is that actually what the tax authority may have sent over? So we do confirm. And then we also do analytical procedures. And analytical procedures can have a wide variety of audit evidence. Those procedures may be comparison with the budget, why things are outside of budget range. We can do a predictive test of, let's say, lease payments. So if we want to know what, we have the contract, we know what your lease payment should be, months times 12. What that rent payment was times 12. Does that make sense? Is it outside the norm? So those are types of analytical procedures we can perform. And audit documentation. So as I mentioned, the auditor is responsible for performing an audit. We have certain standards that we have to follow, and the biggest one is documentation. The one thing you'll hear from us is if it's not documented, it's not done. And so our world is, we spend a lot of time in your office, but we also spend a lot of time in our office documenting all the things that we've asked you for. So audit documentation is actually defined as the record of audit procedures performed, relevant audit evidence obtained, and the conclusions the auditor has reached. So we have to prepare audit documentation in a manner that is sufficient to enable an experienced auditor having no previous connection with the audit to understand the nature, timing, and extent of the audit procedures performed and the audit evidence obtained, the significant finding or issues, and the conclusions reached. So that sounds like a mouthful, right? So everything we've looked at, everything we've asked you for, all the things that we've identified, we take copies of abstracts of your agreements. We document the conversations we have, so don't think we're taking notes on you guys, but we are. The who, what, why, when, and where of the audit documentation has to be in our file. So there's a lot done outside of us just sitting in your office. So there's a lot of documentation required. Okay, so we talked about the audit opinion on the financial statements. Let's talk a little bit about single audit. So a lot of you guys may have either have had or may have now, because of all the federal funding coming down, a single audit. A single audit is a separate compliance audit that an auditor performs when federal awards are in excess of $750,000 in 1 year. Federal awards that are expended in 1 year. That is an audit opinion over compliance. So a single audit is required when you have, it could be one federal award that's in excess of the $750,000, or it's multiple. And the reason it's called a single audit is because years past, each OIG office would come in actually, if you got your money from Health and Human Services, they'd come do an audit. If you get your money from the Education Department, they'd come do an audit. So it became burdensome on governments to have auditors in their office all the time. You imagine one's bad enough, but having 10, if you have a large government, that's kind of crazy. So back in 1986, they passed the Single Audit Act, and that required the one audit of all programs. And there's a risk assessment process similar to the regular audit, and we give an opinion on compliance, whether or not you materially complied with all the requirements under federal regulations. So your grant agreements, of all those federal awards. And the definition of federal award varies. It is defined in uniform guidance, and that does not apply to awards or to expenditures that may be related to administrative type awards where there's a vendor relationship. So if it's a vendor relationship, then that's under a contract for an exchange transaction versus a non-exchange transaction where you may be a subrecipient or direct recipient of federal awards. So kind of a key distinction. So making sure your auditor understands, has a copy of the grant agreements so that you as a group can identify what's required. That's all prepared by you all on the schedule of expenditures of federal awards to tell me everything federally that you've received to see whether or not you have to comply with this requirement. Right. So who requires an audit? Diane? No. Mike? So the legislative auditor requires the audit if you meet certain criteria over a certain threshold, and I think Diane's going to cover some of those thresholds of when an audit was required. So you guys, or state has an excellent requirement that public organizations have to have an audit. The SEC, you may be familiar with those guys. They're kind of important, and if you issue bonds, they're very important. And so yeah, you have to have an audit for your debt compliance. Regulators, we talked about uniform guidance, requires you to have an audit. Bankers, if you have a loan out there with your bank, may require you to have an audit as well. Researchers, legislatures, and really the public. So Diane?
We have to share a mic.
Okay.
So you have to give me this mic, and then I will give it back to you.
Okay.
It's a new development. So always developing. Let me put this on. Oh, this is going to be crazy. We're going to get through. Feels like a Monday. Anyway. Okay, let me back up because I like that other slide because I'm real proud of this. Laws in Louisiana. So I went to a conference where I got to meet or a meeting where I got to meet other directors of local government services from audit places, state auditors around the state. And we have some of the toughest laws in the country, I'm going to say, about public funds, about the transparency and accountability of public funds. So number one is that we require an audit. Actually, Jennifer Shea would tell you we need you to report to us on every single dollar that you spent of public funds for that. Also, our non-compliance list. So let me tell you, in New York and Massachusetts, no audit is required. Can you believe they don't require audits of local governments? Not that I want y'all to go get a job in New York and Massachusetts. I like you right here. Our non-compliance list, and don't raise your hand if you've been on it. It's an uncomfortable place to be. Hopefully you're only on it for a short period of time, which means you're out of compliance with the audit law and basically that you haven't submitted your report to us on time. The 3 strikes rule, and when you're on the non-compliance list, the end result of both of those, 3 strikes rule and non-compliance, is that you temporarily lose your state funding. Any money that flows through the state, that spigot's turned off until you turn in your audit report, and then we're good to go again. And the 3 strikes rule, and I'm helping you with this. We're going to keep helping you with this. So this is when you have the same finding for 3 consecutive years with the same administration. So we are acknowledging we have to help you to solve those because some audit findings can be very perplexing to solve. So we're going to help you with that. Also, fiscal administration, which I don't want to talk about. That's when we have to take over a town and just help them to uncover. And fiscal monitoring in other states can go on for 20, 30 years, which means you have fiscal stress. You don't know how to solve your problem. The state auditor's office monitors you, but why don't they solve your problem in 20 years? I'm just saying. Other way. Also, the reporting requirement to us, every dollar of public funds. So for the most part, sworn financial statements are due 90 days after the end of the fiscal year, and everything else is due within 6 months of the end of your fiscal year. You will live and die by that.
Okay. All right, so just, it's like really kind of crazy here. But anyway, okay, so what an independent auditor can and can't do. There are a lot of things we can do. That's a very short list of things right there, but there's things that we can't do. We can't act in the role of management. So the biggest thing for us is we can't sit in your shoes and make those determinations. We can't set policy. We can make recommendations based on best practices, but it's not our job to set policy. It's management's job to do so. We can't record transactions for you. Again, your accounting staff is responsible, you guys are responsible for making sure entries that are proposed by the auditor, and just that, auditor's entries are proposed. So just so you know, I guess I would say though that you have a right to understand, and you should understand, we ask you to sign off on journal entries when we're done through the process. So if we have a proposed audit adjustment, it's proposed until you accept responsibility for that. If you're not accepting responsibility for that, we can no longer be independent. So there are a lot of things we can do. We make a lot of inquiries. We can assist in the preparation of financial statements. You say, wow, how can you do that? And still remain independent. As I mentioned, as long as you're able to understand the financial reporting purpose, the financial reporting standards and processes that are in place, as long as you understand that and you understand why entries are being made and you're providing us a trial balance in order to prepare those financial statements, then we can still remain independent. We have to put controls in our place, though, in our offices to make sure that we do stay independent. So typically we have another party, another director or partner outside of our firm to set controls in place to address the self-review threat that may exist by us preparing those financial statements. So we have somebody else in our firm review those financials. Engaging the auditor. Magic. Oh, okay, thank you. So, legislative auditor, it's going to tell you that we have to be engaged 60 days prior to your fiscal year end. And a quick question for you. So, how did the auditor propose to his girlfriend? With an engagement letter? Okay. I know, that's like a dad joke, right? That's a dad joke for auditors. Anyway, so the contract between us says we're going to audit those financial statements, what management's responsibilities are for those financial statements, and all the terms of the engagement. And as we said, 60 days after the end of the fiscal year. I said before, after the end of the fiscal year. So Diane, I think you're going to prepare for us for what the auditee is going to tell us.
Okay, so here we go. We're going to go really fast because we have 30 minutes and we have a lot of really good stuff for you. So basically, one of the first things that I used to do as an auditee, and I'm just going to be honest with you, sometimes you have so many things on your mind you have to write them all down. So I started by making a list that says, I got to tell my auditor, I got to tell my auditor this. And the list grew and grew. And this is a list of basically major events. So one good way to prepare for your audit is to schedule a meeting with your auditor, and you all know your organizations, but basically in month like 10, 11, 12. And the reason you don't want to wait till month 12 is because if there's something like statewide agreed upon procedures come out, and lo and behold, we add yet one more requirement for a written policy and procedure, you will have a chance to get that done before the end of the fiscal year. If a policy needs to be changed or procedures need to be written, you'll have time to get those things done. And so you go over just the major events. Now, the reason why the auditor wants to see this, and you can see all these from grants, debt activity, banking, changes in leadership and key personnel, they do need to know that. That's part of their checking up the skills, knowledge, and experience that you have. They also want to know about solving your audit findings and management letter comments. They kind of start with that list, which irritates us. But the point is, and when I say, because I've done it, oh, those are all solved. It don't work, because remember the schedule she had about evidence? Yeah, you need to give them evidence. Any new procedures that you have, software implementation, all kinds of, if you got awards, I would encourage you guys, it is a very, very big deal. to get the GFOA Certificate of Achievement for Excellence in Financial Reporting Award. It helps with your bond rating and so many other things. And there's a Distinguished Budget Presentation Award still, and that speaks to the high quality of your accounting and your staff to earn those awards. The financial results, they want to know, they don't want to know what they are, they want to know why. Why? So we had a deficit. Why? We had an excess. Why? What happened on those things? Any new fiscal policies? This is also a time to develop that relationship with your auditor where you get to tell them what bugs you. And I was a person who got bugged a lot by things. Now, I'm just going to say, not in the accounting department because we were great. It's all those other departments that misbehave. Okay? So when things were not going right in the HR department and it came to my payroll account, it bothered me. And I brought them to my auditor who said, chill, don't worry, or we'll look into that. I like that one the best. We'll look into that because it was a problem I needed fixed, kind of thing. So you get to tell them those, any new initiatives that you have, and the effects of the recovery. We're starting to see this now a lot. You know, how is your recovery coming? Because you're going to start booking FEMA receivables that can last 10 years on your financial statements, you know, but they want to know that. They want to know what's going on. And of course, any capital projects that you have. Tiffany, why don't you talk a little bit about this timeline?
All right. Thank you so much, Diane. Appreciate it. Okay. So she said we want to know all those things. I mentioned the risk assessment process. So all that information Diane just talked about, that flows into all that risk assessment process. So prior to your fiscal year end, that's the best time for us to kind of get together and go through all those things so we can understand where you think the risks are as well as what we think the risk may be. So a timeline. So the way we really like to look at a timeline, establishing that timeline so that you know and your team knows when to expect us, when to provide things. So we typically take when is the very last day that we can get that audit out, okay? And let's back it up from there. So we start with the end and kind of back up because there's a lot of things that go into the process as we talked about from an audit perspective and from you guys. I mean, y'all are in it every day, and that year end is pretty tough. If you work in a school board, you got to turn things around in 2 months to get your AFR done. That's a lot, right? And so there's a lot going on. You have a day job. We all have day jobs. We just happen to be bugging you during ours. So you want to establish that timeline. So when can you provide the trial balance? That's important from an audit perspective because I need to know when I can send my team out and finish our planning on what the numbers look like. When the first day of field work would be. And the importance about that is, are you going to be out that week? Are you going to be out the second week of field work? Maybe it takes 4 weeks. Are you going to be out at any time during that period to slow the audit process down? We want to be as efficient as possible. We want to be in and out. We don't want to bother you guys. We understand you have a day job. IT review. Depending on the complexity of your IT environment, we may have a different set of auditors come in and look at your IT environment and the impact it has on that audit. The date of contingent liability letters and due date for those responses. Your attorney letters, if you have representation from your attorney, we typically like to have those 30 days before the report issuance date to ensure there's no additional liabilities that have to be recorded. And then all the different audit schedules. We're going to talk about the PBC list here in a minute, and that's a prepared by client list. But when's the last day of that audit draft that we need to get to you guys so that you can go through your processes? For our junior ends, Thanksgiving and Christmas kind of comes into play, you know, because the audit requirement is 6 months after your fiscal year end, so December 31st, right? So put in there Christmas, Thanksgiving. So you kind of got to back it up, right? Because I know you guys, nobody wants to be dealing with the audit on Christmas, right? Okay, I'll tell you, I have not ever done that, but I have worked Christmas Eve and I have worked the day after. Okay, so here's kind of an example of the audit timeline. I'll just go through it, Diane, if you don't mind. We've run out of time. So here's just an example for you guys. Okay, and this is from one of our school board audits. So it's kind of give you an idea of the idea of kind of who you have a time, you have an event. And then you also may want to use on this is like, who's going to do it? Who in your office is going to be responsible for that? And when are they going to do it? So we're just going to kind of flip through this real quick because I know we're running out of time, but it kind of gives you an idea. They're going to be out Thursday, GFOA conference. We got to have the AFR due to the Louisiana Department of Education by October 30th. So we're kind of looking at things as it relates to what you guys have on your plate and what the auditors have to look at to get the audit done. Finalizing findings in November. Y'all have a, yeah, I know how much y'all love findings, but that requires a response from management. We want to give you the opportunity to ensure that you have the time to understand why we wrote the finding and what plan of action that you may have to correct the finding. Because remember, Diane said there's a 3 strikes law, right? So we want to make sure you understand what the finding is so that you can adequately respond and have a corrective action plan, who's responsible and when that's going to take place. Because next year, the first thing we do, Diane said it, we're going to come ask again, how did you correct the finding that existed in the prior year? Okay, so preparing for the audit. From our perspective, we have to pick the right people. We have to assign staff, we have to assign the timeline, and we try to work it through with you guys on when's the best time to get that done. Provide to you as soon as possible the preliminary list of items needed, and we're going to walk through what that is. We call it the provided by client list. However, some people may call it different, the audit request list, etc. Send confirmations.
Preliminary.
Yes, definitely preliminary. So you may think that that list is the end all that be all. So auditors sent me the list. I gave them everything on this list. Why are they asking for more stuff? What's a preliminary list? It's how we're going to get samples pulled. It's how we're going to get additional information, and it may prompt additional information. And then internal control questionnaires, getting those out as well.
So how an auditee prepares, communicate. You just have to communicate. If you don't communicate with your auditor and they have surprises, I have seen many extensions where we didn't know we now have to instead of a review. We didn't know we need an extension because of the single audit. So had you communicated with your auditor during the year, there won't be surprises like that. That's why you want to have that meeting early. Also working with your contract accountant. So some organizations will have a contract accountant which is in between the staff and the auditor. And if you're in one of those situations, I recommend that at that preliminary meeting and that list of major events, you involve your contract accountant in that, because we also see a lot of extensions because the contract accountant can't get the work done. And so you have an engagement letter with your contract accountant, and if you have a contract accountant who doesn't think you're near as important as the legislative auditor thinks you are, then you might want to consider putting in your engagement letter some key timelines to make sure that they have those deadlines in the engagement letter, because then they're in breach of contract if they don't have those. Getting your governing body, so to adopt the compliance questionnaire, my auditor used to hound me on that thing, and I quickly learned should you want to stop it, what you do is in the very first meeting of the fiscal year, because it's as of the new fiscal year. It's as of the end of your old fiscal year. So if your fiscal year ends June 30th, it cannot be at your June board meeting. It has to be. You get them to adopt that, you hand it to the auditor, you're good to go. You have at least one thing off your list of things to do. And then having that meeting to discuss those major events.
All right, what you've all been waiting for, the PBC list, so the prepared by client list. I think we have about 15 minutes, so we're going to just kind of run through this. But so these are the things we're going to ask you for. So this is the cheat sheet for the auditor. They should be providing you this in advance. And if you go through the process year after year, you're going to know what they want, right? So just change the dates. If they wanted it for July and June and July, August, September, just give them the next go round. So you get started prior to the auditor actually providing this list. But the biggest thing is we're going to look at board meeting minutes, because that gives us a very good summary of what's happened during the year. So we are required to review those minutes from beginning of your fiscal year all the way to the end of the time we issue our report. And why is that important? Because we may ask from, We may ask for your fiscal year, but we're going to ask again while we're in the field to try to get up-to-date information, because you may have other subsequent events that have to be disclosed in your financial statement that may have been taken by the board after fiscal year end. Trial balance, we all like numbers. We are accountants at heart. An auditor is not, we're an accountant way down deep. Accountants. But we love a trial balance. It helps us with planning. It gives us the preliminary information we need to kind of understand the transactions during the year. Related party transactions, big key audit area. Related parties are significant from an audit perspective to understand whether or not arm's length transactions have taken place and whether or not it's in accordance with the laws. Schedule of board members' compensation. There's an act that came out where we have to disclose board members' compensation, right? We're also going to ask for, and I don't know if we have it on this list, but the CEO, administrative officer, salaries and information. I know how much all of you love to disclose that information, but it's key and it's one of the requirements that we have to do. So we're going to ask for that up front. Retirement rate schedules. We ask for those things because we want to do some preliminary analytics on your expenditures, on how much those retirement payments were. Operating information, so as a school board, what's your student count? What was it at February 1st? What was it at October 1st? So we want to understand those things to understand how we can plan and review that information from an analytical perspective. We talked about a single audit, so the schedule of expenditures of federal awards, the CFA, as we love near and dear to our heart. So we talked about that already. Budgets, we want to review the proposed budget, the adopted budget. We want to see those amended budgets. We want to see the presentation in the newspaper that's required on, and if the budget actually includes the budget message and all those things that are required by the Legislative Auditor's Office, or by Louisiana law, I'm sorry, not by the Legislative Auditor, but. And then, so those are things that are on the list, right? Some easy things that you can find. Some of you guys have it on your website. So we typically would, if you're not presenting on the website, then we're going to ask for that information. Or you could just say, it's on the website, go get it. Like, duh. Okay, bank recs. Why do we need bank recs? Are y'all up to date? Are you keeping your bank recs up? Cash is king, right? We always say cash is king. So we want to see all those bank reconciliations that occur. We want to know all the bank statements that you have. We're going to confirm that cash balance. Collateral statement. So there's a law out there that says you can't have cash in excess of the FDIC limits, so you have to have that collateralized by a bank. So we want to see those statements. Investment statements. If you have investment, if you're lucky enough to have money sitting in investments, we want to see those statements as well. There's certain disclosures that are required. So we're obtaining information to support the numbers that are going to be within your financial statement. Again, but it's preliminary, right? Because you hand us a statement and all the money went out, I'm going to ask you, what happened to all the money? What'd you do with it? But we'll corroborate that and collaborate that through your board minutes and things that have happened through the different committees. Documentation for any prepaid items. So should you have prepaid items, we want to see support for that. Schedule items of inventory. If you actually have inventory, provide us a list. We want to understand the process you use to account for that inventory, if it's LIFO, if it's FIFO. Capital assets. So from a governmental fund perspective, we don't keep up with capital assets till the end of the fiscal year, right? So we expend capital outlay in our general fund, and at the end of the year, the audit's going to say, I want a roll forward of your capital assets. What does a roll forward mean? So we use the term roll forward. I would consider it a reconciliation of the beginning of the year's capital asset balances to the end of the year. What were your additions? What were your deletions? And we have an example here on the next slide of kind of what's going to be required in that schedule. So identifying number, that's important, right? You never know what the asset number is, where it's located. Because if we want to do a physical review, so we talk about inquiry, observation, we want to come look to see, is that car still sitting in the parking lot, or do you no longer have it? The beginning balance for your assets, the additions, deletions, the ending balance, then your depreciation. What was accumulated depreciation at the beginning of the year? what is the adds, what is the subtracts for any sales or impairments that you may have had. So, and then obtaining the net book value. So that's pretty much a roll forward. For construction, we're going to want to know the construction in progress. So what's happening, what's still going on, what completed during the year, that all impacts the property, plant, equipment roll forward. And a new thing to add to this that gets this year's leases. So we'll have to talk about adding leases to the list, of the right to use of those assets.
And SPIDAs.
Oh my. Let's not kill them with that one. Okay. So here's just a little bit of summary about what the construction in progress schedule may include. And this is just some recommendations, and we can send you some examples of Excel spreadsheets should y'all want that. I'm happy to share that with you guys. They're kind of like a starting point for these documents. But construction in progress, what's the project name? What's the funding source? You know, how's this being paid for? Beginning balance and any pay applications, the additions, the deletions, retainages that may be required. And then the commitments. So what's remaining? How much do you still owe under that contract? So all that has to be disclosed in your financial statements. So again, it's an easy way to provide the auditor in advance information that they'll be looking for, instead of us knocking on your door and say, hello, can we have all the commitments that you have? And you're like, oh my goodness, we had 50 projects going in the beginning of the year and I have no idea. So trying to keep up with this on a regular basis is a good idea. Due to, due froms, and transfers. Auditor key number 1, if they don't to 0, we're going to ask a question. So making sure those due to from balances. So due to one fund, receivable in the other, payables in one fund, receivable from another fund. You'll have all that worked out in a nice little schedule that kind of ties everything together for us. Transfers, same thing. What comes in must go out, and it must balance to 0. Payables and accruals. So a schedule of what makes up your trade payables. We typically like to see this in buckets of 30, 60, 90, or greater than 120 days. You want to say something? Oh, I'm so sorry. Look, I'm like, just sorry about that. So accounts payable, the trades payable. So most accounting systems and some of the accounting systems we've seen may not accurately reflect some of this information. It may not be something, if the system's old, you may not have this readily available. Some other smaller governments I know may not have the sophistication of running reports in this way. But we're going to ask for that. It's important because we want to make sure you're paying your bills kind of timely and that there's not a cash flow problem. Accrued payroll, accruals that you don't do. Typically, you probably record only once a year. So being up to date on what that requires. If y'all are good little stewards of accountants, we like to see accruals done monthly, but I know that's not realistic, and so you're just having to do it for the audit at fiscal year end. Other liabilities, claims analysis, if you're self-insured, having that information. Post-employment benefits, y'all know OPEB. It's one of your other favorite things, right? In accordance with the net pension liability that you had to put on your books at the government-wide level. So having those huge liabilities for a government. The information we use here is to test the information provided to the actuary in order to assure the valuation. We talked about valuation earlier, that value is correct. And the assumptions used by management understands those assumptions and that they are in accordance with standards. Same thing for the retirement system, health insurance, your plans and rates. We're looking for testing premium payments and whether that's happening correctly. New debt agreements, Diane already talked about that. We're going to want a copy of it. We're going to want to see what debt covenants there are out there and things that you have to comply with, timing of your reporting, whether it's privately placed or publicly placed debt, whether or not you have to file with EMA. And then the debt service payments that you made. Amortization schedules of your debt. So from a payroll perspective, here's an example of what should be included on payroll. So if we're trying to reconcile payroll, This could be a nice little list for your auditor on the pay period, the pay dates, what gross wages are, what's being withheld, to kind of give us an understanding of all the things that are coming out of all the payroll, all your wages. So like if you're like me, my net is way less than I want it to be with all the things that come out. So we need to have understanding with that and making sure that all those things are in accordance with the laws. Revenues, we want a schedule of what you're receiving from your tax collectors from a property tax perspective, from a sales tax perspective if you have those revenue streams. If you're an enterprise fund or business type activity, what are the fee rates that you use to charge? Looking for all of those things to understand the expectations of what the numbers should be. Bank statements, investment statements for each month, grant award documents. Now, typically this is only new grant award documents. We don't want every grant award that you ever had. It would just be new. And then a ledger of any other revenues that you may have. Expenditures, we typically ask for payroll reports, your quarterly 941 reports, to tie in the number of wages paid in total as a government. Legal fees, and we understand legal fees in order to send out the attorney letters and to determine whether or not there's commitments at the end of the year. All contracts, that's also required for the statewide AUPs, so might as well start on that list now that they're back. And then purchase orders. Okay.
It's me.
Oh.
So, I don't know about y'all, but I'm tired. I mean, that's a whole lot of work to do. And like when the auditor says we're going to be there about 3 weeks from now is our first day of field work, to get all of that ready for your organizations is daunting. So one of the big things you're going to want to remember is start working on this early. And I don't know if my auditor ever figured this out, but this is what I used to do. All that easy stuff like minutes and stuff like that. Like I had all that done real early because, you know, I have a 2-year-old grandson. And so I've learned that you distract them with the shiny stuff, you know, to get their mind off the other that they really want. And so, no, I don't have capital assets going yet. I mean, it ain't going to happen for about a month and a half, but here's some minutes. You know, get started on the minutes and get started on the bank reconciliations and things like that. So when you look at the list and sign it out to your staff.
Pretty sure we had that figured out.
That ain't right. Probably did. Same thing every year, huh? Yeah. So when when you're going through that list and think about who you're assigning your staff to, because there are some that take forever. There are some that you can love, you know, and all of that. Also working with your auditor. You know, you want to build this relationship and you want to make things easy on both sides. So a rule of thumb is give your auditor the information the way they want to receive it. So some auditors want paper and other auditors say upload it to our portal, email it to me. Whatever. I mean, for you as the auditee, if you can get that information to them the way they want to receive it, that works really, really well. So let's talk about following up in the few minutes that we have left. After the audit's done, you're not finished. The report's issued. You have some things to work on. So first, you need to go through your management letter comments and your audit findings and your statewide AUP exceptions, because it kind of starts there. And go look through that, make sure you understand that, and say, okay, this is my to-do list for the next year. I got to get these things done. We did add in our statewide AUPs, they're about to come out this month, that there is a board oversight component on solving common audit findings where, and we asked, did the governing body receive a written report every month on the status of solving the audit findings until they're fully resolved? So I have been through that. It's a tough thing to go through. My board asked me for that, and I only did it about 2 months because I got those things solved. I didn't want to do that all 12 months, you know, to do that. But we realize that's one thing that we hope will help with those common audit findings and get them going. And then we need to debrief. While it's fresh in your mind, debrief. What went wrong? What went right? You know, how could we have done better? Maybe she shouldn't have done the capital asset thing. Maybe she should have done it instead, you know, and things like that. Because you always want to improve. You always want to be better for next year. And then also, look, I'm just going to tell you, get ready to engage. Think about your engagement process for next year. Because one reason one of the qualifying reasons to get an extension should something happen is that you engage timely. So right after your auditor ends, y'all say, do we like our auditor, we renew another year, or don't we? Because some have very lengthy processes, might do the RFP process and all of that stuff to get auditors. Others don't. Board approval and stuff like that. So get started early so you can have that thing knocked off your to-do list. And then this is a big important slide, and we want to leave you with this. The audit is really your time to shine. Now, nobody's perfect, all right? And we all can learn, but the point is you learn. The point is you learn from each other. So what's great about the client is the auditee has this big depth of knowledge in one organization. They know their workers' comp experience modifier. Okay, we are deep in the details. The auditor is broad across many. You heard me say Tiffani knows nonprofits, foundations, cities, retirement systems, school boards. That's her area of expertise. She probably has others. That's broad. So we can learn from each other. And well, I used to have my little Diane feelings hurt when I had a finding, and well, how do other people do it? And she would tell me, we have a client, and they had the finding, this is kind of how they solved it. And I'm like, can I have their name? You know, and call them. And we learn from each other in this room and online in your communities. You know, just learn from each other to get that part right. And it does show all the areas that we excel. So in school boards, they call it opportunities. I think when you do wrong, it's an opportunity. I just thought it was when you did wrong. But, you know, it is your time to shine. So think about it that way. Have a positive outlook for it. An audit is not a one-and-done event. It is an event that happens every year, you know, and just always work on getting better. And with that, we thank you so much for your attention this morning. We are going to take a 10-minute break, and we will start, well, let me rephrase. We are going to start back at 10:10 with our next session. So thank you.